Welcome everyone to another daily financial market report. Today is December 6th, and it's definitely some very interesting times. I'm gonna see if I can make this a little shorter. Excuse the noise in the background. I am doing this outside, so let me move to a little bit of a quieter area here. All right. So, let's see. There's a lot going on in the world, a lot of storms. If you take a look at our calendar, our MAS score, this is a very good indicator to let us know how the market is doing, especially in regards to the specific market that each calendar represents. So this represents the Forex market. There aren't a lot of alignments, a lot of different mixed movements, different forces opposing one another. You can definitely see that on the report. There are probably just about a few that are in alignment, and the ones that are in alignment, the amount of profits are not that big. So the profits are not that big. We could take a look at some other reports, some other markets, I should say. Let's take a look at the commodities market. Again, we see the commodities market go pretty low. This is around 11%. So we're at 11% MAS score, which is very, very low. Okay. Now, with the exception of, let's say, silver doing pretty good. I mean, it's not aligned. It's not aligned, but right now, as of now, while I'm doing this, it is 8 p.m. Pacific Standard Time. Silver is doing pretty well as far as its alignment. And for a wise investor, that means that we're making profit while silver is dropping. So that's what we have taking place right now. We have silver dropping, we have gold dropping, but as a wise investor, those who are part of our network, who have access to this daily financial market report, can easily see how they can benefit from this drop. And so that's pretty much what I mean by silver is doing well. All right. Now, to the rest of the world, those who are trading or investing in the traditional sense, the traditional sense is only bullish. That means that when people invest in different assets, they're only looking for it to rise in value. They're only looking for appreciation in value. And so when it doesn't appreciate in value and there's times of depreciation, that's when they consider things are going bad. So we see that throughout the world, especially when we look at the last calendar. I'll go ahead and go over that once we get there. Right before we get there, let's look at, actually, wait a minute. Something's a little off here. What happened here? Okay, so this is not right here. Let's go ahead and fix this one here. Should be cryptocurrency and not commodities. So let's go ahead and fix that. Okay, so the cryptocurrency was not, let's see, cryptocurrency is the one that is 11%. Okay, so that's just a mess up on the update. Instead of the image reading the cryptocurrency, it's reading the commodities, okay? But the cryptocurrency is also at 11%, all right? And actually, let's go ahead and take a quick look and see how we get to these numbers. I mean, since I'm on here now, I might as well just show you guys how we come up with the MAS score. So it's basically the amount of alignments, and what counts as an alignment has to be no stressors. There cannot be any stressor indicators on the asset on this report. So we have Zcash that's perfectly aligned. Now Zcash just became perfectly aligned as of today, because you can see according to the current market value, it just started a brand new trend, and that's as of today. So, but before that, there was no alignments with Zcash. So Zcash, Monero, Litecoin, and Dash Coin, all of these are perfectly aligned. Now we can see that they're perfectly aligned in the sell position. I'm not sure. I just parked real quick there. No problem. So they're perfectly aligned, but in a sell position. So for those of you who are into cryptocurrency, you're obviously, a lot of you, the majority I would say, are into it from, again, the traditional standpoint of investing, and that's always looking for an asset to appreciate in value. So many of you all in cryptocurrency right now are talking about the crash that just took place in the cryptocurrency market. All right. You could be making money with cryptocurrency if you have access to this daily financial market report. All right. So I counted 4 that are perfectly aligned. So I'll just go ahead and pull out a calculator really quick. So what I'll do is 4 divided by how many assets are here, 9. And we have 44%. So is that right? Yeah. So the pictures here are a little goofed up here, I believe. Did we have 44% on one of them? Yeah. So it was 44%. Let me just make sure. All right. I think the mix up. Yeah. So it was 44%. The mix up had to do with the the image should read cryptocurrency, instead it's reading commodities, but it is 44%. So that's how we came up with the MAS score. So it's an average. It's just an average. So when we look at the average, we can see and get an idea of the condition of the market. So right now, as of now, we have the Forex markets going through a storm. Commodities market is going through a storm. And so is the cryptocurrency market. That's going through a storm. Okay. And I'm going to have this corrected for those of you who have access to this report. Don't worry about it. The image will be corrected. Okay. But it is 44%. So everything else is correct on here as well. Indices. Okay. So 25% is the lowest it's ever been in about, I've mentioned it before. I'll say it again, about 2 years. It's the lowest it's ever been. So that means that when we look at the indices here on this, we're looking and we're seeing what the news is always talking about. You know, when you turn on the news and you hear the bad news about the market and it's crashing and it's falling, this is what this represents, okay? So that's one of the reasons why. Now, if we see this, we know which direction these indices are going, all right? These indices, all right? So it's a plural of index. So we got the NASDAQ and all the other ones here that are listed here. I don't want to go into full details about that, but just know that this is what is being reflected on this calendar when we're looking at it. So we're obviously seeing the markets around the world are going through a lot, all right? But guess what? Just like I mentioned before, you don't have to freak out. There's no need to freak out. If you are a wise investor, then you know, okay, I can make money on the NASDAQ by selling it, for an example, all right? So we did that, and it wasn't a lot that we collected on normally. So here, as of today, we this is all the ones that we collected here. So totaled up to $894. But again, $894 compared to the full account, let's see what's going on the account. In order for us to see that, we have to actually go into the MyFX book and see how this account is going. Now, this particular graph does not reflect the account that we just looked at. This particular graph is very similar to the account that we just looked at, in that it's going also according to the current market movement. So let's actually go back here. Let me see. Let me actually go back. Okay, so we have 3 graphs here. We have one graph, current market movement, which is the purple one, and that's current market movement strategy. It's just the basic one that we're looking at here. If we that's the highest it's gone that it's at so far, 45%. Now that's what you're gonna notice, that you're gonna have that type of pattern. You're gonna have this high growth, and then you're gonna have this drawdown, and then growth, drawdown. So profit phase, drawdown phase, profit phase, drawdown phase, up, down, up, down. Okay, very basic, simple concept. Okay, especially when I'm so happy I'm doing this so I can show you guys the movement of the strategy. All right, so the other one is similar to it. It's also current market movement. It's just bigger lot sizes. All right, not too many closes. But if you look at it compared to the other one, we are pretty much still around the same area in growth. And I want to show you guys that really quick. So let's go ahead. Now, the highest gain of this account is at 45%. That's pretty high, especially seeing that we started this in November, beginning of November. So if we take a look at it, see where we are now, we can see an ad here. Let's skip that ad. We can see that even though the growth was at 45%, if we look at the pattern, we'll be able to know exactly what's going to happen next. And not only that, we're going to also get a better idea as to where we actually are overall currently. And that's really based on the equity, because the account is still moving. It's a long-term account that's designed to continue on. Okay. We will one day get back to this 45%. Maybe in, I don't know how long. I don't want to speculate on the time frame, but at some point in time, we'll come back to that 45% growth mark. When? I don't know. But let's take a look and see kind of what's going on from the percentage aspect of things. So at the beginning, of course, when we started, 0%. The highest we were up was about 2%. Then it went down to about in the negative area, the negative zone, not quite 1%, but close. And it went as high as 8%. Went up again. Now this time it went below the negative 1% to negative 3%. And we saw this growth that kept on swelling, especially as we were transitioning to another month. And the highest peak that we reached, again, 45%. Now, if we go to the equity that we're currently at, which is 11%, that means that if I were to close out every trade right now, even the negative ones, if I were to close out all the trades right now, this is where we would be at our growth for 2 months. Okay. Now, some of you may say, oh, well, man, you're like missing like a lot there from 45 to 11%. You know, wouldn't it have been better to collect the 45% growth as opposed to the 11% growth? Yeah, of course it would be better. And that all depends on you as an investor. If that's what you want to do, then you could do that. I mean, you got to remember that with this strategy, the reason why I offer these resources And these tools are it's just, I go off of a standard. Okay, now these resources and tools are designed for you to kind of work your way around it, to kind of find out where you fit, what works best for you, if that makes any sense. So everyone's a different investor. Some might, hey, if you want to stop when you get to a certain percentage growth, then stop and collect. And you want to come back again and trade at the beginning of the month or at the end of the month. I don't know. Find out what works best for you, whatever pattern works best for you, whatever you decide to do, then just utilize our resources to better find your style. Okay, it's the best way I can explain it. But what I'm gonna continue to do is I'll continue to bring these updates. I'll continue to show you all how this works, and you'll be able to see how this account will continue and how this account will continue to grow. And that's pretty much my job here, is to report it and show it and be transparent and let you all see it for yourself that this strategy absolutely works. All right. So thank you for your time. I thought I was going to make this a little shorter. I guess I didn't get to do that on this video, but nonetheless, it was very informative. I hope you learned a lot. I'll see you on the next update. And remember, only winners invest in their minds for wiser returns.